What's the best way to invest $100 in 2025? If you're a beginner, the options can feel overwhelming. Stocks, real estate, crypto, gold, index funds. Which one is actually worth your money? To find out, I ran a 4-year experiment. I invested $100 into 5 different assets and tracked the results. In this video, I'll share how each investment performed and break them down by learning curve, passive income, tax efficiency, risk, and real returns. Let's start with individual stocks. Buying a stock means owning a small part of a company. If that company grows, so does your investment. Sounds great, right? But the learning curve is high. You can't just pick random stocks and hope for the best. You need to understand financial statements, like income reports, balance sheets, and leadership strategies. When I started, I used a demo account to learn without risking real money. I recommend that for every beginner. Stocks can earn you money in 2 ways. The price goes up, or you get paid dividends. Dividends are regular payments some companies give to shareholders. It's like a reward just for owning the stock.
And here's the good news. Stocks can be very tax efficient.
In the US, a Roth IRA lets you grow investments tax-free. But the risk is high. One bad company choice, and you could lose your money. I picked 20 random stocks using a dartboard. The dart landed on Samsung. After 4 years, that $100 turned into just $67.76.
A loss of over 32%, even with dividends.
But if I'd hit Apple, Microsoft, or Nvidia instead, that $100 could have grown to $170, $180, even over $900. That's the gamble with individual stocks.
You need luck or skill.
Next up, REITs, or real estate investment trusts. These let you invest in real estate without buying property. Imagine pooling money with thousands of people to buy apartments or malls. You all earn rental income from tenants. Learning curve? Moderate. You don't need a mortgage or lawyers, just an app. REITs are famous for a high passive income. By law, they pay out 90% of profits to investors. If their properties are rented, you'll earn steady dividends. It's like owning real estate without any landlord stress. Tax efficiency? Also great. In the UK, REITs in a stocks and shares ISA are completely tax-free. Risk? Medium. My REIT invested in commercial buildings. Tough during the pandemic. I lost 1.4% on the value, but earned $11.93 in dividends. So overall, I ended up on 10.5% in profit. Now let's talk about crypto. Bitcoin, Ethereum, digital currencies that exploded in value. The learning curve is moderate. You'll need a wallet, a secure exchange, and strong passwords. Crypto doesn't pay dividends, but you can earn passive income through staking or lending your crypto and collecting interest. But it's risky. Platforms get hacked. Coins crash. Volatility is off the charts. And the taxes? Messy. Every trade might be taxed and no tax-advantaged accounts apply. Still, my $100 in Bitcoin grew to $652. That's over 550% profit, the highest return of all. But remember, that's not normal. Crypto is exciting, but not for the faint-hearted. Fourth, gold. It's been used for centuries to store value. Learning curve? Super low. Buy physical coins, or invest through gold ETFs on apps like Trading 212. Gold doesn't generate income. It doesn't pay dividends or interest. It's just a store of value. But in times of inflation or crisis, gold shines. It's stable, trusted, and respected globally. Tax efficiency depends on your country. Some gold coins are exempt from capital gains tax. My $100 in gold grew to $140, a solid 40% return. Safe and steady. Not exciting, but reliable. Finally, index funds. These track the top companies in the market, like Apple, Amazon, and Google. With one investment, you own a slice of hundreds of businesses. It's passive, diversified, and ideal for long-term growth. Learning curve? Low. No need to pick stocks, just buy and hold. Dividends? Yes, though not massive. They're reinvested automatically if you choose. Tax efficiency is fantastic. Roth IRAs or ISAs keep your profits tax-free. And the risk? Low. The market goes up and down, but index funds bounce back over time. My $100 investment grew to in 4 years. That's a 79.5% return, without stress or speculation. So which one wins? Crypto had the biggest gain, but the highest risk. Index funds offered strong growth with low effort. Gold was safe but slower. REITs delivered consistent income. Stocks, a mixed bag. Here's the lesson. Start small, diversify, and invest consistently. Time is the secret weapon. Even $100 can grow into something meaningful if you give it enough time.
So, what's your investing style?
Let me know in the comments below. And if you want to see how to earn money online with almost no effort, check out the video I've linked right here. Thanks for watching. Now go build that portfolio.